forexpreparation.com. Today is Wednesday, the 21st of November 2007, and we are currently looking at the 5-minute time scale of the US dollar Canadian dollar pair. Okay, what we see on the screen is this 5-minute time scale, as I said, and we have just noticed this divergence between the relative strength indicator and the chart. And this is pretty much an indication that this pair will start falling down in the next several hours, because this is just a 5 minutes time scale, and as such it is a very volatile and not good for any long-term predictions, unless you're looking at it for an entry from an entry perspective. If you go to a 1 hour chart, the picture is completely different, and what I mean here is that we are in an uptrend. As a general rule, it's not a good idea to trade against the trend. So pretty much what I suggest to do is wait until you see a break above this resistance level here set by those previous peak, which is around 0.9877, and then if we see a close above this level, it would be a clear indication that the trend is continuing its uptrend. And again, when we go to the 8-hour chart, we can see the same picture here, where we're having this uptrend, or this is the initiation of a bigger uptrend, and we can see the channel through which our currency is moving. We have just touched the lower boundary of this channel, which is an indication that our currency pair is bouncing back, and it is continuing its climb upwards. On the other side, we still have a continuation pattern here, which is this triangle formation, and in uptrends it is known as being a continuation pattern, which means that our currency pair is expected to reverse to the upside. On the other side, our relative strength indicator is trading above the 50 support and resistance area, which is another strong indication that the mood on the market is pretty bullish. If we go to a daily chart, what we can see here is that again our relative strength indicator is trading in the above 50 area. It's right now trading at 62.43, and pretty much the picture here is the same. We are starting probably a new uptrend, but we need to be a little bit more patient and see whether this trend would lead us, and probably this is gonna be a part of this small channel here. Okay, so when we go back to the 1 hour chart, the thing that I can advise you to do is just wait until you see a definite close on the hourly chart of above this level of 0.9880, and then probably put a reasonable buy order with very tight stops until you're more sure that this is going to be the right direction. Or what I mean by very tight stops is that, for example, if you open a position after the candle closes at 0.9880, then you should probably place a stop loss order at around those levels, which are around 30 pips below this resistance area at 0.9850, and even a little bit below this area, for example 0.9845. so this are gonna be like 35 pips that you'll be risking, but there is a great potential that this currency pair is going to try to reach for the upper boundary, which is approximately 250 pips, 300 pips away from where the currency is trading at right now. So the risk reward ratio would be around 10 to 1, which is a great thing, and again, you should be, when you're trading forex, this is the best strategy when you're waiting for such a scenario, when the risk reward ratio is great, and I mean, is great in terms of the rewards that you can get, and never risk too much money on these 5 or 15 minute time scales, because most of the time, if you're not very experienced scalper, they will lead you to nowhere. And even if you're trading on this time scale, it's very risky, and at the same time, with those volatile markets nowadays, it's not worth it. Okay, so see you tomorrow. Bye bye.